Welcome to the 90s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 99 Capital Group. Thank you guys for joining me. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple and Amazon. If you have any questions, comments, or concerns, you can email us at info@99capitalgroup.com. Send us your questions. Go to the website at www.99capitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 99cap or at MLB to CFP. Today, we're talking all things Bitcoin. What's going on in this crypto madness? Is it crypto winter? Well, we have the man, the myth, the legend here to talk about that today. Tyrone Ross Jr., 401 Financial, Turnkey Labs. He's going to break down what's really going on behind the scenes. Tyrone Ross Jr., welcome to the show. Let's get it. We have my man, Tyrone Ross Jr. on the call today. And forgive me, I got a little bit of a cough. Had a COVID a couple weeks ago.
Oh,
but
wow.
yeah, I mean, people always say, hey, they still got COVID. That's still a thing. Like it's scurvy or something, but they look at me crazy. You know what I mean? But like I said last time, welcome to the show, my man, the second fastest man ever to be on this podcast. Congrats on being chosen,
Yeah,
my friend.
I appreciate you, my man.
Dude, hey, Turnkey Labs, 401 Financial, you're doing your thing. I see you in all these different places. But the conversation we're going to have today is what everybody wants to know about because this is your world. Like Bitcoin, cryptocurrencies, what's going on in the space. And we're just going to go right into it, man. Massive liquidations. What in the hell just happened to see 126 down to 60? What I think it hit 59,000 some change. Man, what the hell's going on?
So that's the thing that everyone is trying to figure out. And I posted this on X that every time Bitcoin has a drawdown, the only thing that gets worse than new people coming in and experience the drawdown is the rationale for why it's going down. Right?
Yeah.
No one knows.
Yeah.
Now, what it looks like it is, if you look at some of the on-chain data and some of the things that are out there, that there was massive liquidations. I just posted this in the LinkedIn post, about 2 billion or so, where it was a big player. Some folks think it may have been a hedge fund, some that are overexposed to IBIT, the ETF. And there was some forced selling, and you know what forced selling does?
Yeah.
You get more forced selling.
Yeah.
So I think that's part of it. I think I said for a long time I really wasn't a fan of the ETF, but this is part of what you get when you have an ETF. But and if I'm being frank and honest, it probably hedged a lot of what this could be. If it wasn't for ETFs and institutions, maybe that's, we're down 80%.
Okay.
Now, so there's some good and some bad to it, but you got to be careful about what you ask for because you definitely will get it.
Yeah, some people were saying MicroStrategy, Michael Saylor, he's the guy that had to liquidate because he had, he's underwater and all this stuff. And then, of course, like you said, selling begat selling. So I want to go to this, and this is just my thought process around the whole dynamic. And tell me if I'm wrong. Okay, tell me if I'm wrong. So we've seen JP Morgan and the BlackRocks of the world come on. They were poo-pooing it a long time ago. But they found a way to make some money. They found a way to make some money. And they said, oh, okay, we'll let you guys have it, right? What's stopping the big sovereign wealth funds, the big sovereign and the banks from just saying, okay, you guys can play. We'll just piggyback the infrastructure on the blockchain because we already have the internal blockchain, the permission-based blockchain. We'll just piggyback it, create our own coins. You guys do what you want. I mean, is that the direction you think it's going?
That's exactly what's happening. This is part of the other issue is that the space has been co-opted. I mean, crypto it was 3 trillion all in. Like that's a pimple on the elephant's butt. When you look at the total capital markets, right? Size of capital markets. So yes, you get those players in, they're going to co-opt it and they're going to make it their own. And this is what everyone wanted. I didn't because I'm a purist, right? The whole point was to get away from these people, not say, oh, okay, yeah, we want to be invited to the party because you knew that this was going to happen. I also believe that that was a coordinated effort,
Yeah.
that they want to push this price down. They want companies to die. They want to absorb human capital, right? They want to pick up cheap assets, and they're going to send this baby right back to 200K all-time high in Bitcoin. It's going to happen. You just
Yeah.
know it. So, yes, and you're starting to see permission blockchains, which is crap. You're starting to
Hmm.
see tokenization marketed everywhere, which is crap. They mean on chain,
Hmm.
but all these marketing terms and things that traditional financial people are talking about, that's the problem. And
Yeah.
that should have been a sign to everyone that you lost the plot. Now that these people are in control, this is what's going to happen. And I think that's what you're getting.
So you'll have these big players like whether it be China, whether it be JP Morgan, they'll have their own coins. It's like
Yep.
and then boom. And then so what happens to coins like a Bitcoin or some of the ancillary coins, the Ethereums and things of the world? Are they going to be impacted by that, or is it just
Yeah,
going to
they
be
accrue no value. So you
uh
have all these original layer ones. I would set Bitcoin aside,
mhm.
but you have all these layer ones now. The value isn't accruing to an Ethereum or to a Solana, or to any of them, right?
Mhm.
And then you have layer twos on top of that. And forgive me for the crypto leads here, but just to make a point
Yeah,
is,
yeah, yeah.
if now to be clear with Ethereum, Fidelity is using Ethereum for their FIDD, which is their coin,
Hmm.
and which is backed by treasuries and everything else. But guess who keeps all the treasury interest? They do, because they can't issue it on a coin, right? So
Yeah,
even when they're using the open permissionless blockchains, they're still finding a way to co-opt it. This is what people aren't paying attention to here, and especially in crypto, because you got to know how both sides work. So yeah, it's great they're using Ethereum, but how much of that value is going to accrue to Ethereum? Very little. Most of it is going to accrue to Fidelity. God bless them, right? Great. It's great that Fidelity is involved, but I think what you're going to see, yes, everyone is going to launch a coin,
yeah,
right? Everyone is going to have their own blockchain. That's not the way that this was supposed to go. So I think this gets to where I put in that post as well. The original three sins of which crypto is kneeling at the altar now for those
hmm,
sins are starting to bear fruit. And one of those is the original sin was labeling them cryptocurrencies,
yeah,
because everyone's like, oh, okay, well, it just should act like money, right? And then
yeah.
the whole thing. And then there's this advertising and branding issue where it's like, okay, we need a new narrative. Store value. Yeah, yeah, yeah. It's a store value. And then that doesn't pan out. Oh, whoa, digital gold and digital oil. Well, no, it is not really, you know what I mean? So you
Yeah.
got to find a new narrative where if we would just would have stayed home and focused on your own backyard, things would have been better. But I think and I hope we go lower. Boy, I hope we go to 50,000. We need to wash out all of the crappy coins. We need to wash out the rest of the charlatans. And we need to get all of the TradFi people that all of a sudden are on board to go, man, I made a mistake. And then once they do that, we'll go higher.
So you said wash out all the garbage coins, like the
Yeah.
those those
Altcoins.
yeah, all those
Yeah.
altcoins. Yeah, because a lot of those people who have those altcoins, and I don't want to get political, I'm not going to do that. So
Yeah, we don't need
they
to, but they horrible. Trump coin, Melania
yeah,
coin. Yes, they
yeah,
will.
and they make money on transactions,
Hmm.
and and they don't give a damn if the coin goes down to zero.
Yep.
Wow. I mean,
Yep.
I didn't, and then people are left holding the bag. Like I recently read somewhere where Liberty Mutual, not Liberty, World Liberty Financial, the
Yep.
Trump organization, they were deciding who they were going to allow to sell at certain points. And the
Yep.
people were like, "Hey, I want to get out." No, you can't get out. And there's and now it's just going down, down, and down. People are getting hit left and right.
Yep.
Why would you want your money into something like that? Like, why would you even trust any type of altcoin at this point? Given the fact that we've seen it time and time again, it's
It's
just
just
it's
number,
nonsense.
it's number go up, man. And
Yeah.
you know how human beings are. You're an advisor. We know how this is. We look at what people own sometimes and we go, what would you do this for? Right? And there's really no rationale behind it, but maybe some people bought it because they are MAGA and they love Trump. God bless. Maybe some people bought this particular coin because their buddy said that he made 100x in it. That don't mean you gonna make 100x in it, right? Like
Yeah.
greater fool theory, right?
Yeah.
So, I just think that people need to pay more attention to this. This is not a space where you can just go, oh, I'm in and then I'm out. Oh, I'm in
Mhm.
and then I'm out. I've done this 24/7, 365 for the last 13 years of my life.
Mhm.
And once I knew that this is the direction that I was going in, I remember walking into my mentor's office at Merrill Lynch, and he was like, he loved me, so he didn't call me an idiot, but he was like, man, you're an idiot. And he many ways as you can. But I knew that if I was going to do this right, I was going to have to go all in, and it was no looking back. I don't look at dinosaur bones, stock. I don't care about any of that crap because they're
Yeah.
all coming this way anyway. But as an advisor, am I aware of it? Sure. Do I have a financial planner who's my partner who's aware of it? Sure. You follow it, you see what's going on. But what I mean is, when I had conviction that the entire financial system was coming this way, I went all
Mhm.
in. Still believe that. But just like anything, it's 17, 16, 17 years old as a space. Like, it's so young. It's still more growing up to do. And this great washout needs to happen. You saw it with the internet, you saw it with the dot-com bubble, you saw all types of that stuff. So these little beanie baby type of fads and people have these coins and that coins, they all need to die. And I believe that when it's all said and done, you probably need 15 to 25 coins that are air quote investable. And then I think we'll really be able to get that to be the precipice of something bigger, but also the foundation of, okay, now what does the underlying blockchain technology do that allow us to not have a 401k rollover take 6 weeks? You know what
What
I'm saying?
concerns me, because I recently, so just full disclosure,
Yeah.
I owned some Cardano a long time ago. I ended
Okay.
up selling it like it, the price was 91.5 or something like that. And
Mhm.
then I put in my sell order and it says sold at 88.75. I was like, hold on. That's what pisses me off is
Yeah.
that there's no true bid ask spread
Yeah.
in Coinbase market, and
Mhm.
someone's making some serious money
Yep.
on those trades. I want to
Yep.
know how that's even happening. And that's why I mean, I do own some Ethereum, but
Yeah.
I don't trade it because there's no real spread, man. And if
No.
there's no real spread, like what are you paying?
Yeah,
It's
and
crazy.
that's the thing that people don't know is very opaque. So here's what you're used to, and I'm used to as being registered advisors and using institutional grade tools and architecture and real custodians.
Yes.
Crypto was built for retail. Let's just get them access. They don't need a bid ask. Just buy, sell, right? This is why they're catching up with tax forms. I mean, hell, Coinbase still doesn't have beneficiary designation. They can't generate a statement. They're a public company now. Like, this is the real deal. Gemini and others. Like, we just need to start being honest. Let's cut the crap.
Yeah.
And that's why my other company, that's why Turnkey exists, to solve all of that. And not to talk my book here, but that's just what it is.
Man, toss your
So
book. It's all
I,
good.
I I think it's just, yeah, it's cool, but that's really, it's just honestly what it is. That's why I built my last company, because it was like there's a huge opportunity here to give a greater look into markets, make it fairer, right?
Yes.
Make sure people don't get taken advantage of. And until that happens, you're not going to get $140 trillion space of RIAs and independent broker dealers and wirehouses to come in here until there's real visibility into what's going on, which is why you take a Ferrari, you add training wheels to it, and you make Bitcoin an ETF. Now, all of a sudden, what do we have? Exactly what you said, right? We have a bid and ask. We have, we can see the liquidity. We know BlackRock is in. We know Fidelity has one. We know Wisdom Tree has one. And
Yeah.
we trust those names, right? Well, we meaning generally, not.
Yeah.
But
Yeah.
you know what I'm saying? So I think that's where we are, man. But you're absolutely right, and I think that's part of the issue. And at some point, you love someone enough to go, you got a drinking problem, man. Like,
Yeah.
or your auntie or whoever it is, like Aunt Pat, you can't have another piece of cake. Like, this is, you know what I'm saying?
Yeah.
I love you enough to tell you you're ugly. You know what I mean?
Yeah. Yeah.
You know what I mean? Or your breath stink, whatever it
Yeah.
is. Crypto needs to do the same thing. We have to look at all the time that we spent and the money we spent and look at what exists and go, man, our furniture is messed up in the front. We got to fix this. We
Yeah.
need some veneers. You know what I mean?
Well, but that goes back to what I was saying, like from a regulatory perspective, who's liable for that? Like if you're getting out, like let's just say I put a sell in and it sells at something that's outrageous. Who am I going to go to and say, hey, they just screwed me on this deal here? Like,
Yeah.
how do I prove that? Who do I talk to?
So there you go. That's also part of the issue now. Is it the SEC or is it the CFTC, right?
Yeah.
They're trying to figure that out now, right? It looks like the CFTC is going to have jurisdiction over the exchanges, but you got to think about it. Let's do that. When you go to set up your RIA, who do you custody with, right? Who's your custodian?
Schwab and Altruist.
Okay, there you go. So you already know Schwab, Fidelity, Altruist, Pershing. That's kind of like, and you know what they're going to do. You're very confident in that. You don't have to sit here and do much due diligence, but you do enough just to figure out pricing.
Yeah, I'm expecting them to get my trades through, and 100%.
Now, in crypto, you got Coinbase, which is an exchange. It's a broker. It's a money transmitter. It's all of these things. Like, just do custody, please. You know what I'm saying?
You're saying there's a conflict of interest there.
Yes, you're a market maker. You're a prime broker. You're listing stuff. You got perps. You got all type. Now you got prediction markets. You got it's a million things here. The only thing Coinbase doesn't do is walk dogs. Nothing else, right? So how do you trust a custodian like that? No, what is it? Is it an exchange? Is it custodian? Is it a broker? Is it a market maker? Is it right? Like, is it an asset manager? We don't know. So I think that's part of where this gets a little tricky, because you wouldn't look at Robinhood as a custodian, would you? No. But people look at Coinbase as one where they're competing with each other. Coinbase is competing with Fidelity and Schwab and Altruist and everything else. So again, taking off those rose-colored glasses and looking at the space in reality. And for me now, it's been long enough for me. It's like I've been through the battle. I've been through all the wars. I've been through them all. It's like I've been very vocal on LinkedIn and very vocal on X as well, which is a lot of the things which is wrong here. But it's the venture capitalists, it's the founders, right? It's these pattern matched, geeky, nerdy clowns that has never been successful at anything in their lives, but now found crypto. So they have this little gizmo blockchain. They launch a token. They look like who they think should be successful. So they give them all this money. And then what do? They steal.
Yeah.
Right. And then they proselytize the future that's not real. And then you got on the other side of that, you have, retail investors that have been burned and then burned again and then burned again. And now what do you expect them to do? Okay, well, let's fill that in with institutional money. Then you have people who never used the blockchain, never sent assets on chain.
Yeah.
Standing in front of people, telling people this, that it's all the way around. It's not good. So I think this is the great washout, and I pray we go lower. Like, there's some talk that we could possibly hit 30,000. I think that'll be so good because, boy, at that, if we hit 30,000, there will be, it should be like 10 of us left. Like, right, that are truly still going to believe. Everybody else, wash out.
So I guess my main question is this, because you hear so much about it's the majority of it is held by the Winklevi and all this other stuff. Like, am I wrong to think that if it's held by a few large hands, how can it be something that Bitcoin, and we're talking about Bitcoin, how can that be something that we can consider a store of value and something that should be trusted?
Yeah. So,
or am I wrong on that altogether?
Yeah, there's a little bit of a misnomer there, right there. Okay. So you can look on chain and see the striation, if you will, or the dispersion of how the coins are held. Yes, the majority are the biggest wallets, if you will, or whale wallets. Sure, there's a lot of those that hold a lot of Bitcoin. But as you start to zoom out, you start to see those that have, let's just call it zero to 1 Bitcoin, right? And 1 Bitcoin to 10, they start to make up a very diverse set
Okay.
of the holders. And I think there are a lot of people who hold very small portions, but it's what in the industry we call dust. So it's really hard to know. So there are more individuals who own it than the gargantuan folks, but that's just like anything else, right?
Yeah, that's
Like
true.
if I have one piece of the puzzle, yeah, I hold a piece of the puzzle, but you got 20 pieces of the puzzle. So we still own the puzzle, but you have a lot of it. So there's a lot of those one piece puzzle owners. Now, what is interesting about that is what you see, which is to that point, is whenever you get selling like that, and even leading up to this that cascade of selling yesterday is the long-term holders
Hmm.
weren't selling.
Yeah.
They were holding on and they were accumulating even, where those that are those smaller wallets are selling. But that's the other thing. It's very hard to get a really good look at on-chain data because you could have multiple wallets attached to one individual.
Hmm.
So you just see that main wallet, you don't see all of the other ones because Coinbase consolidates a whole bunch of wallets and then that lands on their ledger. And every custodian does that. So really digging into the data, you do see there's a greater number of smaller holders than there are whales, but it inverts because those folks are holding on, they're buying, and then those folks that are just getting in and bought it at the peak are the first to jump out the window, like yeah. And then what you saw yesterday is you're starting to see a lot of now when yesterday long-term holders are going, wait a minute, right? Galaxy, I think, had a gentleman he was up 9 billion and he decided to sell for state reasons, right? Which is smart. You up 9 billion, get out,
Yeah.
right?
Yeah. Yeah.
But
Yeah.
I think what you saw yesterday was it was just like, all right, I bought this in 2017, I made X, I'm getting out. So it forced a lot of that. So the truth is, no, it's not. There are some big whales for sure, but the on-chain data shows there are a lot more people who own small amounts and smaller wallets, but it's Pareto's rule, man. The 80
Yeah.
20 rule, you know?
Well, so to your question, or to my, I guess go back to the blockchain thing, right? So the original, and I read number go up, but with my Zeke Fox, and I thought it was pretty good. I mean, I'm not sure if you read it or not, but um, you have permission versus permissionless and all of that. But the beauty is that it wasn't traceable at one point,
Yeah.
and now all of a sudden they're finding ways to trace it. Is that right?
Well, it was always traceable,
Okay.
right? Like you can't if you interact on the blockchain, it's open, it's public. You
Yeah.
can find it, right?
Yeah. Yeah.
Now there's certain things you could do to mass transactions and things like that, but it was always visible to find out, right? Perfect example. Your public address
Hmm.
is like your license plate.
Hmm.
So when you driving around and you see somebody's license plate, how much do you care? You don't. Like it's
Yeah.
there. If you really want to write it down because you saw a little kid get in the car or they cut you off or whatever, you're like, I'm
Mm.
gonna report this thing.
Yeah. Yeah. Yeah.
But it's only so much you could do with that. You got to hand that off. Like you can't really do much with it. Now, if I have your car keys, which is like your private key, I could sign transactions, I could do a whole bunch of things,
Hmm.
right? So those two things together are dangerous. So in that example of what you're saying, yes, um you can get more information with more that you have,
Hmm.
but it's very easy if I have your license plate to take that license plate or your public key and go on a block explorer and I can see who you've been transacting with and what you've been
Okay.
doing.
Okay.
You see what I'm saying? So it's not like you doing some, you know what I mean? Like, you know
Yeah.
how many cases we had at 401 Financial of from estate attorneys and divorce attorneys of spouses thinking they're hiding crypto? You ain't.
Okay. Okay. Yeah. I was always under the impression that nobody can track you because you're hearing so many stories where the FBI or the CIA or whomever like the case in New York where those people were doing something with crypto and they
Yeah.
found out where they were hiding it and all the other stuff. It's
Yeah.
interesting to me.
Yeah,
It's
there are
interesting.
privacy coins like Zcash. You can use what they call mixers. There's a lot of different things you can do to kind of shield transactions.
Mhm.
But again, if you are deciding to operate on an open public blockchain, you've decided to have, sex in a phone booth. Back in the day. Like we can see y'all.
Man, this is good, man. I'm not gonna take too much of your time. I just wanted to
Yeah,
kind of get an idea of
yeah,
what your perspective on what happened recently, because again, a huge washout, a lot of weak hands. They call it
yeah.
hold on for dear life, right?
Hold on.
And
Yeah,
and people are trying to hold on. Here's
yeah,
my last question for you,
yeah,
my man. So what you say you would love to see it go down to 30,000, wash
yep,
out a bunch of people.
yep,
What's the long term game here with this cryptocurrency? Because again, I had a friend, he knew nothing about crypto. Now all of a sudden he's trying to teach me about, hey, when someone who says they know nothing and all of a sudden they know everything about it and they start teaching me about it, I'm like, hold on, man.
yep,
I've been reading up on this stuff for the last like 5 years, and
yeah,
I still know that I know nothing. Right?
yeah, yeah,
Like you always say, the one thing about Bitcoin is that you know nothing about it, right? So
absolutely.
so yeah.
Yeah,
So when people like that start coming to me and trying to educate me on the blockchain and Bitcoin, that's when I start saying, aha. And
yeah,
that's what happened. The market, it was down 30-40%. So what say you, like, what's the long-term game on how
yeah.
this is gonna should basically wash out?
Yeah, no, I love that. It's like people who also recently found religion, right? Now all you want to talk to me about my lifestyle. You was just in the club with me. Like now all of a sudden, man, get out of here.
Yeah, yeah.
Proverbs 14:10 says, okay. So the long-term game is this. I think there are a couple things here that are important, and I've been saying this for a very long time.
Well, how about this? What would you like to see?
What I'd like to see, which I think is going to happen, is one, wallets are going to replace accounts. I think that's going to happen. You're no longer going to have an account at Fidelity or Schwab. You're going to have a wallet. And that wallet is going to have an address that if you put it at Fidelity, you put it at Schwab, it can show you directly what you hold.
Yeah.
Two is that the entire financial system will be fully digitized and run on chain, meaning all asset classes are going to become on chain, not tokenized. The people that are getting paid for that, God bless. On chain is what they mean when you hear tokenized, just on a blockchain. Because guess what? If something is tokenized, it got to be on a blockchain. I also don't know what a real world asset is. Is this a real world asset? I don't know, but I digress. So,
Yeah.
on chain, meaning that now stocks, bonds, treasuries, all those other things will be on chain so you can move and trade at any time, always have liquidity, always be able to trade. Don't need a third party, don't need permission from Schwab or Fidelity to do this or that. That's what I believe. That's the second thing. The last thing that I believe here, which is the long game, is I think to what I just said, that universe of crypto assets is going to shrink a
Mhm.
lot. And you're going to be left with those that accrue value, very similar to PE ratios, and be able to do all these things that advisors want to do, like a hyperfluid. Forget the name for now, right? But a chain that actually is making money.
Mhm.
And I think decentralized finance as a result becomes really integral in financial services. That's the three-step process that I think is going to happen.
Well, okay. Well, that I got a wrinkle real quick. I got a wrinkle.
Yeah.
So help me understand how some of these coins. It's the last question, by the way. How can some of these coins give you such a high rate of interest? Like what? And when I see that, my antenna go up. I'm like, hey,
Yeah.
what? That doesn't sound right. And then when I read the disclosure, it says, well, if you put coins into this bucket,
Yeah.
they could theoretically go away.
Yeah.
So
Yep.
I how is that like how is that a thing? How can somebody say here's 3% interest, here's 5% interest, here's 7% interest if you just
Ah,
yeah, it's
it's
crazy.
50 in some cases, brother. So there's multiple ways to it. That's a whole separate podcast. But
Yeah,
basically, I can take the asset that I have and I can lend it,
yeah.
and I'll get a return. And depending on where I lend it, I can get more money. So if I lend to Coinbase, I think that with using Morpho, you get 4% now.
Yeah.
But if you go on chain into a DeFi protocol and bridge it and then wrap it and then lend it, now I'm talking 15, 20, 25%, right? And it's just people opting into that. Then you throw some leverage on top, and then you got a whole, cocktail Sunday of disaster.
That's what I'm saying. Like that can't end well.
No, it never does. That's what you saw. It's what you saw yesterday. So I think so. It's that you can go into and you're going to see this, right? As traditional rates come down, you're going to have people going into DeFi to find those higher rates. And it all depends on risk and what it is that you want to do. But yeah, you can get 20, 25, 30, 40% if you're willing to take that risk, man. And it's, it's perps, it's prediction markets, it's bridging and swapping and lending. And so you go to these different pools of, assets, and then whoever wants to borrow from it. And again, you throw some leverage on top, and it's a Molotov cocktail, man.
For my man, T-Rock. Hey, listen, man, this is all about capitalism, right?
Sure.
This is what you just described was capitalism gone amok, right? It's just, and it's the same thing that happens time and time again. We're talking about this AI, 200 billion for Amazon CapEx. You're like, you don't even know what ROI you're going to get on that. You know what I mean? And it's like, what's the expectation on that? And by the way, it's going to basically be obsolete in the next 5 to 7 to 10 years. What are we doing here? It's constantly one of those things where I feel like I'm screaming in a vacuum. Yeah. And that same thing with crypto. I feel like I'm screaming in a vacuum sometimes. No one's listening. But Tyrone, man, I appreciate what you bring to the table. You give us the knowledge around this place. And again, love what you do, man. And anytime I have a question, you're the guy I go to.
The feeling is mutual, brother. I'm grateful to be a resource. I put a lot of time and effort into this. And I always love it when my peers and colleagues reach out. Because it gives me the ability to add value. But more importantly, I think that's what makes our space great. I don't know everything about insurance and estate planning and tax or whatever else. So it's good to have people you could tap. And I'm grateful to have this partnership with you, brother.
Tyrone Ross Jr., 401 Financial, Turnkey Labs. Thank you for joining us, my man. Appreciate that. We just had my man, Tyrone Ross Jr. on the show talking about Bitcoin, crypto winter. Are we headed lower? Which direction are we going? Of course, no one knows, but we have to get a little bit of insight on what's really happening behind the scenes. And he is the guy to ask. And I had him on the show today talking all things Bitcoin, all things blockchain, and why he doesn't feel like what has happened in the current state of play should have occurred due to regulation, industry dynamics, and things like that. But again, wonderful episode. As I always say, subscribe to the channel. Go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@nineeyecapitalgroup.com. Send us your questions. Go to the website at www.nineeyecapitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 9eyecap or at MLB to CFP. And subscribe to our Substack. Now what? Thank you, Tyrone, for being on the show. Wonderful episode. Insightful. Keep bringing the noise. Keep bringing the education. Thank you guys for listening. Stay humble, stay safe, my friends. I'll see you again soon.